Hi everyone, welcome to Logical Investing with Shubhendu. There was quite a break when we last recorded our videos, and then today we are. I will be regular going forward in creating some of these videos because these are the times which I feel that you and I should definitely have a conversation. A lot of things have changed in the last couple of weeks when we did not record videos. We have seen the Ukraine crisis really pick up, and everybody, and including the market, started reacting. Hopefully, things would get to a closure, and hopefully, the market should start rebounding. Now, as an investor, as someone who is going to put in their hard-earned money into the market, what is it that we should do? Markets are really, sometimes we feel that markets are really volatile. They have corrected a lot from the top, almost 13% as correction we have seen in the index. Some of the small caps and the large caps. Small caps is where we mostly invest in, and most of them have corrected, by a good amount. And we have also seen that some of the small caps, resilient small caps, some of the ones which we have talked about them already in this channel, they have come down. They have also started going back up. We talked about Sam Century Ferris. That stock, we picked up at around 15-16 rupee levels, and then it went up and then came down, and then now again it is trading at around 19. So there are a lot of good stocks which we have talked about. We'll continue to talk about them, but as always, if you are new to this channel, I would like you to subscribe to the channel so that we will be able to have a good conversation on how do we improvise our stock picking strategy, how do we improve how we choose the stocks to invest in, and what are some of the criteria which we look at, what are some of the research which we do, why do we need to pick up company A versus company B today, when all of these many of these companies which we are looking at, they are available at a very attractive valuation. Many of these companies, you see, FMCG, even the large Nestle has corrected from 20,000 levels to almost about 17,800 levels. You look at any large cap, they have corrected, right? So at this point in time, what are some of the things which really look attractive to me? Please do not treat any of these stocks which I discuss in this as recommendations. I will tell you why. There are so many YouTube channels where videos have been created, and then people are talking about stocks which are penny stocks, large stocks, all of that, mostly penny stocks, stocks which are which started from about 20 paisa in their current price, and then they have gone up to 4 rupee 50 paisa. Now imagine any stock which has gone up 40x within a span of maybe 4 or 5 months also. Companies, any stock price which has gone up by 40-50x on continuous upper circuits, and then you are not able to get it. And then if there are YouTube channels which are creating videos which talk about waiting for an opportunity to get into them, when the P is exorbitantly high, it really pains me, it really hurts me. So I feel that it's really a good move, that everyone should take their trading decisions based on their own investment, based on their own research, and by properly having discussions with their investment advisors, because it is hard-earned money which we are putting into the market, and there is no way we should be looking at any random channel who talks about companies going ballistic from stock prices of the companies going ballistic from these levels and so on. So that's my thought. So please, again, do your own due diligence, understand why these stocks are good, and then based on that, if you feel that these are stocks to be held on for a long time, then absolutely go ahead and take a position. Okay, now we will look at one industry, which is the diagnostic industry. When we visit a doctor, the doctor will recommend some tests. For example, it's a blood test or any other test related to the body. So either there are two options: either you can do that within the hospital if they provide it, or you probably would visit a local diagnostic center, right? Or you are taking a phone consultation with a doctor, which is on the rise and definitely was increasing during the pandemic stage because we were not moving out. So we wanted to have someone consult us on phone, and then whatever tests were prescribed, we used to do that either through home delivery, home pickup, sample home pickup, or we used to visit a diagnostic center. Now these are diagnostic centers. Because of pandemic, the diagnostic centers started seeing huge, appreciation in terms of their revenue, in terms of their margins, and these stocks have actually gone up from very low pre-pandemic levels to the current levels. In the last 2 months, the number of queries to the diagnostic centers have kind of reduced because people go for less tests related to COVID. But there are other, ailments for which people, still get prescribed to have tests done, and people go to diagnostic centers and so on. So what has happened is suddenly, as the market, as the country, as the world gets healthier, some of these diagnostic centers would come under pressure for their revenue. That's number one. Second is, diagnostics industry per se has perceived lower barriers to entry. It doesn't need a huge lot of capital expenditure to set up a new diagnostic facility. Then the third point is that it's a low margin business. All these three makes diagnostic industry less attractive than anything else. If you start looking at their PE levels, if you start looking at their price to earnings ratios, you would see that they are still, even though they have corrected significantly from their top. Vijay Diagnostics was recently, they recently had an IPO, it was recently listed, and then from the listing prices also it has come down quite a bit. It had probably gone down to almost 420, 410, 420 levels, then now it has recovered and so on. And the other stocks have probably come down almost by 20-25% from the top already. So now the question is, what next? If you really look at the PE of these companies, they still are trading at more than the industry PE. I strongly feel that the diagnostic industry is not going to go anywhere. It is going to stay. There will be different other ailments for which tests needs to be done, and as the tests get more and more complicated, and as the tests need more and more improvised machinery, the need for capex to set up such differentiated labs and diagnostic chains will definitely be much higher, and with that barriers to entry will definitely, in my understanding, that diagnostic industry is not going to go anywhere. That will absolutely continue to see revenues, COVID or no COVID. Revenue of the diagnostic industry is going to stabilize and probably grow whenever there is a spike of any of the diseases which are coming up. So what should we do? I would be looking at some of these companies. I'm watching these companies which we talked about, and then I would be looking to invest in them once the valuation becomes a little more attractive, and once the PE comes within my range. We will definitely create some videos, and we will start looking at them. But I would say that these are good stocks to start looking, to start watching in your portfolio. That's number one. Number two is, I have also seen that in this, with Ukraine, Russia war and all of these things which are going on, I feel that the finance stocks, companies like Bajaj Finance, companies like HDFC Bank, all of these have taken a beating. Now, Bajaj Finance and HDFC Bank, they are the super large caps, and then they are the darlings of the stock market. And anyone who would have invested in them 10 years or 15 years ago, and then would have held on to their investments, would already been that would have been multifold from their investment price. These are seriously in wealth multipliers, right? Multibaggers in the true sense. Now, even those stocks have corrected. If you start looking at the AMC, HDFC AMC, or the Aditya Birla AMC, some of these have corrected, and corrected massively, and are available at a really good valuation. The third type of stocks which I should be looking at is related to crude oil or base oil, right? So I'm talking about the lubricant industry. Two things are going to happen. Right now, we are seeing that the oil prices are surging. The raw material cost for the lubricants industry is going to go up. However, with a lot of mobility getting started again, the usage of lubricants will absolutely increase. So overall, the lubricants industry is definitely going to see a much higher input cost, and slowly what will happen is that will get reflected in the pricing, and so the prices of these stocks is going to go up. The same thing is happening with Asian Paints today, and the input costs have gone up. That is the reason why profitability has gone down, and because of that, we are seeing a healthy correction in the Asian Paint stock as well. And 2 quarters down the line, oil prices have kind of stabilized. However, the prices are not going to go down, so the profitability will continue to be high. And for the lubricants industry especially, because you can defer painting your home, but you cannot absolutely defer going to office when people start calling you to office, when your HR starts calling you to office, and so on. So having said that, I believe strongly that the lubricants industry is definitely going to do well with more and more consumption coming in. I'm looking at a very interesting company called Savita Oil Technologies. When I initially started tracking the stock, it was trading at around 1150, 1160. Now it is available at an attractive valuation of less than 1000 rupees, and I think around 980, 990, around that levels. This is one stock which needs to be kept under a watch list. So we talked about three areas today in our discussion. So we talked about three areas in our discussion today. The first one was related to diagnostic, the overall diagnostic market and the kind of stocks which you have to keep in your watch list. The second one is related to the finance industry, or the AMCs, where we talked about two stocks. And the third is about the lubricant industry, and where we talked about Savita Oil Technologies. So these are some of the stocks which we will be looking at. I will be creating videos about them, in more detail as we proceed. But these are stocks which I would definitely want all of you to have a closer look at and keep in your watch list. Please do not think any of these as stock recommendations. This is my earnest and sincere request to you. Please start tracking these stocks, start looking at their earnings, start looking at why are some of these stocks why are some of these stocks looking good or not looking good, what are some of the threats. I would really appreciate if you could share your thoughts in the comments below. If you could like and share the video, and you could definitely let me know in the comments whether you like the video, what is it that you want to hear more about the videos. Together we want to create such a platform which is helping us in a two-way communication. Now in a video I do most of the talking, and then you consume the content. However, if you are able to share your thoughts with me in the comments, I will be able to take them up and then start creating videos and start taking inputs from there to create videos which will be better suited to what you're looking for. So that's all for today. Happy logical investing. Thank you so much, and have a great day.